Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, crude is edging higher as traders weigh Strait of Hormuz risks, despite President Trump's claims of control and Pakistan's talk of a US-Iran arrangement. US inflation data is due later. That's set to give us a gauge on the war's impact. Tech leading Asian stock gains after strong AI sales outlooks from CoreWeave and Supermicro. Despite the Kospi's bounce, Taiwan seems to be gaining greater favour with foreign investors. Meanwhile, Seoul's launching a more than $700 million fund targeting AI and strategic industries. We hear exclusively from the Deputy Innovation and Growth Minister. We're also going to speak with Standard Chartered's COO about rapid AI adoption in banking despite cybersecurity and governance risks. Our top story today, oil advancing for a sixth straight day on scepticism about prospects for a deal to restore energy flows through the Strait of Hormuz. Earlier, Pakistan's defence minister said the US and Iran were close to reaching a deal regarding the critical waterway, and that's despite both sides publicly toughening their stances.
I don't trust Iran. Why? Are you saying I trust Iran? I'm the last person to trust Iran. They've lied to me constantly. We have total control over the Hormuz Strait right now. They don't have control. We have total control. We own it. And at some point, maybe they'll do something and then they get blown away.
Middle East correspondent Abir Abu Omar joins us now from Dubai. So, Abir, President Trump saying we have total control of the Strait of Hormuz. Why are we even having this conversation?
Good morning, Paul. That is the good question that everyone is asking themselves, right? So President Trump says that the U.S. naval blockade that is currently in place means that the U.S. is controlling the Strait of Hormuz. Meanwhile, the main negotiations that are taking place are in fact happening between Iran and Oman. We've obviously reported on this multiple times over the past 10 days or so. These are negotiations to reopen the Strait of Hormuz. So when you ask if the U.S. is right to assume that it has full control of the Strait of Hormuz, Iran doesn't seem to think so, and those are the negotiations again that are taking place. Al Jazeera reporting recently that those talks are in advanced stages. We don't have clarity on what exactly that means. We've reported that those talks are in the final stages multiple times over the past week or so. The foreign minister of Iran, Abbas Araghchi, had come out and said that those talks are in a good place. And then you also mentioned Pakistan's defense minister, Khawaja Asif, who told reporters in Islamabad yesterday that things are shaping up towards peace or towards something better than what we're currently seeing right now. So in a nutshell, there's a lot of unclarity still around the situation and what exactly is going to be that mechanism that opens the Strait of Hormuz or how exactly it will take place. But one thing is for sure, we monitor the physicality of those vessels in the strait, and for now they're stuck, and not just stuck, we're actually seeing that they're prone to attacks. The latest from Central Command overnight saying that it attacked a Panama flagged ship that did not stick to the route that the US had laid out. So you're not just seeing ships that are prone to Iranian attacks, now we're seeing ships prone to American attacks as well. So you have that situation in the Strait of Hormuz, and of course a perilous situation in the other critical waterway in the Middle East, the Red Sea, Bab el-Mandab, that is prone to attacks from the Yemen-based Houthis, a militia that is backed by Iran, of course.
Yes, the evidence does objectively suggest that the US does not totally control the Strait of Hormuz, as President Trump claims. I mean, we've got the IEA also saying it sees disruption on oil markets now continuing into 2027. So what are the immediate implications around supply and prices for crude?
That's a very good question. So right now, what you're seeing Brent doing is Brent is edging very close to $90 on the barrel yet again. We are not yet at a place, Paul, that we're seeing Brent at around 120, 125. The peaks of the war, that's where we saw Brent edging towards. So we're now seeing it edging very, very close, as a matter of fact, to $90 on the barrel. Now, what it means for global supply is you're seeing that when it comes to crude prices generally, but then it has implications on other crude products, diesel, natural gas. We've reported the massive surges we've seen in those, especially with winter coming in European nations. That is going to be a big question that those countries start asking themselves. Those disruptions are set to continue, and our energy colleagues have reported multiple times, Paul, that even if we saw an immediate, complete reopening of the Strait of Hormuz tomorrow, which is not our base case scenario, even that scenario will not lead to the immediate flow of those energy supplies. That will take months, that will take an extended period of time, and that is inevitably having an impact on businesses across this oil exporting region. We've been speaking to a lot of these business owners who say that the disruptions are real, the disruptions are set to have a continuing impact on their business models.
All right, Bloomberg Middle East correspondent Abir Abu Omar in Dubai, thank you. Oil's climb is putting a lid on Asian stock gains, although Korea is enjoying a rebound. Let's check in on how markets are faring with Avril Hong in Singapore. Avril.
Yeah, Paul, you're seeing crude trending towards 90. That seems to be capping a little bit of the sentiment in the region. But Korea, as you say, is powering ahead, a third session of gains. And if this holds, this could be the third session streak that we've seen in the first time in 4 weeks. And this is against the backdrop of these AI tech tailwinds, right? You got it from earnings, whether it's Supermicro or CoreWeave, whether it's the sales growth or the projections coming up. There is enough demand, it seems, from the AI complex. And then you think to the likes of NVIDIA, don't forget how they clarified things on that $500 billion financing plan that helped to ease some of the measures of credit risk. You have NVIDIA also launching its first open source AI model, the first since Jensen Huang, through his support last month behind that approach. So AI complex finding enough support. I would just highlight as well, when you look at the likes of Japan back from a market holiday, it is seeing that support from the likes of the Japanese lenders. And this is against the backdrop of those expectations of an early BOJ rate hike. Now, flip the board, I would just caveat all this performance that you're seeing in Asia stocks also against the backdrop of lower than usual volumes. We are, of course, watching out for the US CPI, the Tencent earnings. Now, those same expectations of an early BOJ rate hike don't seem to be helping the Japanese currency. A lot of the recent yen weakness seems to be driven by the dollar. And of course, the US CPI could be a sort of catalyst. The oil prices trending this direction also does not help. And you have investors, I think, really focusing back again on the fundamentals which drove the yen weakness in the first place. So a lot of the intervention gains have been erased. You're seeing dollar yen trending towards the 160 handle. Flip the board again. When it comes to the likes of South Korea, the very interesting dynamic versus the TAIEX today that is also outperforming is how, following on from the July AI rout, we have actually been seeing how the foreign investor flows, they've turned net buyers for Taiwan. They're still net sellers for South Korea, which to some suggests that investors are now looking for less volatile, more diversified markets when it comes to the AI play. And with that in mind, you look at how the likes of TSMC are seen as an anchor, right, in terms of having less earnings cyclicality for the Taiwan market. Taiwan's retail investors were also less battered than the Korean ones in the month of July. So some considerations, even as we see South Korea's gauge outpacing the TAIEX today. Paul?
All right, thanks very much, Avril. Joining us now is Fiona Yang, ex-Asia, ex-Japan equities fund manager at Invesco. Fiona, thanks so much for joining us today. And I do want to pick up on those tech themes that Avril was mentioning. We've heard from a few US tech names. We've got Tencent, JD.com, Baidu coming up as well. What are you looking out for in these results? Not just around earnings, but more around AI spending as well.
Yeah, definitely. I think number one is definitely the core strengths of their existing past quarters, how they are doing with their core business in the case of Tencent, how their gaming as well as advertisement business is going. And then the next really important to watch is the AI spending. And on the AI spending is two elements. On one side is OPEX spending, i.e. how much sort of headcount as well as data center leasing they might be doing, and then CapEx spending, which will basically be spending into the cloud business as well as all the other related AI infrastructure that will generate future returns.
I do have to ask you what I now consider the AI question. Where do you place the risk of this being in a bubble?
Great question. I wish I do have a crystal ball to tell you the exact answer. The reality is I do think the AI trend is very real. But if we look back at what has happened in June as well as July, the volatility in the market is extreme. And I think running, especially during the July month, expectation of earnings have just run ahead of reality. And that combined with the technicality such as leverage among the retail investors, as well as overall market enthusiasm towards the theme, just make that AI bubble or mini AI bubble become a reality in the Asia hardware space. But does that mean the AI trade is ending? I don't think so. It's really the broadening out of that theme, whether it's still the semiconductor space or we are going into the next phase. Who is going to be the winners or generating the return after all this CapEx investment? Circling back to your initial question, the first question about internet platforms, which ones are going to do the right spending and generate the decent return on investment over the medium term? That's a critical part to look for in the next leg of AI trade, in my view.
Okay, so if you see some of these names delivering the numbers that you're hoping for, how strong is the temptation to take a little bit of profit here?
Great question. I think at this point on, a lot of the Asia names is still, especially the hyperscalers, are still in the very early phase of AI investment as compared to the US hyperscalers. I think a few factors that were in place preventing them investing very aggressively in the past year. Number one, and the most important constraint, is availability of chips in China. And now as manufacturing capacity ramps up, we will have more of that available to the hyperscalers. And then the other element is really whether the technology gap of the large language model developed by the Chinese players, Chinese AI labs, can really catch up with the US players. And now with the launch of Kimi 3 as well as some of the Alibaba's Qianwen model, we do see that technology gap narrowing. That gives a lot of the hyperscalers or the AI supply chain in China more confidence on investing on their return on all this CapEx.
Well, we saw a tremendous amount of volatility in the Kospi over the past month. That seems to be behind us now with that government crackdown on leveraged ETFs, some other measures as well. When you look back on that period, was that an opportunity to sort of do a little bit of rebalancing, repositioning, or do you view the current period of calm as a buying opportunity?
Great question. I think when I was in the studio last time around to talk extensively about the Korea memory cycle and how I actually saw a lot of bubble building into the expectation. And here we are, the Korean memory names has basically halved in a month. And this point on, if you look at the fundamentals, you look at their 2Q earnings, and after having conversation with management as well as the supply chain, they do realize the demand is still there and the capacity of the memory stock, memory companies are still still extremely limited in the near future. So with the price halving, definitely makes them more interesting now than a month before. And then we should also look at broadening out of the Korean investment. I do think Korean economy can benefit from this semi-cycle, this capex investment by SK Hynix as well as Samsung Electronics will benefit the construction company in Korea as well as the equipment makers in Korea. And then think about all the employees getting the 10% operating profit as their bonus pool. They're also going to spend more broadly to stimulate consumption in Korea. And the last point is really a lot of investors have just focused so much on the memory tech space and forgot about the value-up initiatives promoted by the Korean government over the past years. You look at the broader market, ex-memory, ex-tech market, there are still tons of companies trading below book, and they are progressing very well with their value-up initiative, canceling the treasury shares and trying to pay back more to the shareholders. So I do think there are tons of bottom-up stock picking opportunities still in Korea.
Oh, you're showing some enthusiasm for the Korean story, but Bloomberg's reporting today that on a trend, we're noticing a bit of momentum for foreign investing away from Korea towards Taiwan. Is that a trend that you're looking at as well?
I think it's yes and no. So Korea and Taiwan, they both benefited from the AI trend, the AI hardware trend. And now with the extreme volatility in the Korean market that we have observed over the past months, that just discourage a lot of the retail investors as well as foreign investors to participate, because you don't want to wake up one day and just look at the stock and it's up or 20% or down 20%. In the meantime, Taiwan market has just been a lot calmer thanks to the less prevalence of leverage being used in the market. So there's definitely lessons learned for the Korean government to have tighter restriction on participating of the leverage ETF. And I do think a lot of leverage has been washed out in the July months. And from this point on, we're really hoping the companies in Korea can deliver the earnings growth from this point on. And then going back to Taiwan, I think as a market, Taiwan does offer more depth as compared to Korea in exposure to the AI hardware space. It's not just the TSMC, but we have a bunch of other suppliers available in Korea. Some of the companies that I look at have the passive component producers in Korea, as well as NVIDIA rack, as well as Google ASICs racks, data center racks assembler in the market. A lot of them are still trading at decent valuation, and the growth that they're going to enjoy in this AI super cycle going to be rewarding the shareholders.
All right, Fiona, thanks so much for your analysis today. That's Fiona Yang, Fund Manager, Asia ex-Japan Equities at Invesco. Still to come this hour, we're going to hear exclusively from South Korea's Deputy Minister for Innovation and Growth as Seoul prepares to deploy more than $700 million into a new sovereign wealth fund targeting AI and robotics. This is Bloomberg. Welcome back. You're watching Insight. Let's check in on Korea. I know a few moments ago I said the Kospi's not as volatile as it has been. Well, spoke too soon, didn't I? The sidecar's just been activated after stocks gained. The index up by more than 5%, so that was enough to activate the sidecar. But, it is those big names that are performing the best. SK Hynix is up more than 7%. Samsung Electronics up by more than 7.8%. But if we drill down, the rally's pretty broad-based in the Kospi today. Industrials, the second best sector after information technology. That sector better by 3%. Consumer discretionary also pretty good as well. There's just a handful of sectors on the Kospi that are not in the green. So a very positive day for Korean stocks. And over on our Bloomberg Markets Live blog, the analysis is that these gains are not quite as crazy as what we saw in the first half. Perhaps a sign that they could be sustainable. Also underscoring the far more anemic action elsewhere in the Asia-Pacific region as well. Well, South Korea is looking to deploy more than $700 million of fresh capital into a new sovereign wealth fund next year, targeting AI and other strategic industries. The Deputy Minister for Innovation and Growth, Min Kyung-Seol, told us exclusively about the government's latest push to gain an edge in high-tech sectors.
한국 정부는 특히 이제 최근에 와서
The Korean government, particularly recently, has been actively considering various ways to enhance international competitiveness and raise the declining potential growth rate through active investments in key high-tech strategic industries. Internationally, as recently discussed, we are pursuing active investment in regional areas, including the Honam region, for 3 major mega projects. Along with this, as a new initiative, we are actively pushing forward to establish a sovereign wealth fund, which we refer to as a strategic sovereign wealth fund, to actively lead investments in high-tech strategic industries. Through this, we aim to actively foster potential growth and proactively fulfill a role in responding to future challenges such as population decline and increasing fiscal demands of various forms. Internationally, we understand that various types of investors, including sovereign wealth funds, PFs, and sovereign wealth funds in general, are considering investments in Korea. To serve as an anchor investor to attract investment into Korea and co-invest alongside these key international global investors, we are pushing for the establishment of this sovereign wealth fund.
How much deployment are we talking about, for example, in a year out of this 20 trillion won?
For next year, while exact details are difficult to specify, we estimate the investment amount could range from roughly 600 billion South Korean won on the lower end to over 1 trillion South Korean won on the higher end.
Korea operates multiple state investments when it comes to these innovation technology sectors. So how do you make sure that this new account doesn't overlap with other projects?
Yes, you have raised a very important question. It is true that various funds led by government agencies are currently operating, and we are actively seeking ways to differentiate from those. For example, the National Growth Fund, which has been operating and investing since last year, aims to invest around 150 trillion Korean won. Its main focus is centered on loans or indirect investments through funds. In contrast, when we speak of the Sovereign Wealth Fund, we plan to invest primarily with long-term patient capital and directly make equity investments rather than simple indirect investments, which differentiates it. Rather than solely focusing on differentiation, we're also actively considering co-investing together. If necessary, we use the term relay investment, where we actively consider taking over positions when major public funds seek to exit.
Does that mean that it would actually include the possibility that given the funding is going to flow into stocks initially for this entity, that you could see actually buying, say, chip makers like Samsung, SK Hynix, or contributing to projects that some of these companies are involved in?
Rather than investing in large enterprises like Samsung or SK, our interest lies in companies beyond the very early startup stage, what is typically referred to as Series B. Series B refers to companies whose business models have been somewhat validated and are at a stage ready to scale up. Among such companies, we are considering relay investments to support them when early-stage funds linked to public institutions exit. As for companies like Samsung and SK, rather than government investment, we understand that many international firms are already interested in them, and the government currently has no plans to directly invest in large conglomerates like Samsung or SK through the Sovereign Wealth Fund.
Still to come, we speak exclusively with Standard Chartered's Group Chief Operating Officer as India's central bank urges lenders to accelerate AI adoption while managing the risks that come with it. This is Bloomberg. Welcome back. You're watching Insight. Let's take a quick look at where markets stand. Mainland Chinese markets heading to lunch. Japan coming back online. Mostly green on the screen today, particularly around the energy complex yet again. We've got Brent crude just below $90 a barrel now. Iran insisting the Strait of Hormuz is going to remain closed until conditions met, which is somewhat at odds with President Trump's assertion that the US is in full control of the Strait of Hormuz. The rhetoric notwithstanding, Pakistan's defense minister says the US and Iran are in fact, quote, close to some sort of arrangement. Not really dampening the spirit for equities, however. Modest gains in Japan. The Kospi, though, having another fantastic day, better by almost 5% at the moment. We did see the sidecar activated after gains exceeded 5%. Chinese stocks, meanwhile, better by 2/3 as well. A little bit of weakness in Hong Kong, however. Now let's see how we're tracking ahead of the India Open as well. The rupee in focus again. Traders who are familiar with these things say that the RBI sold dollars on onshore forex markets to support the rupee, and we have seen recent interventions in recent weeks. That reporting, though, coming on condition of anonymity. Nifty futures currently very modestly higher. And of course, we're getting CPI numbers today. CPI numbers due out later for the month of July. Bloomberg Economics expecting inflation eased further as fading supply side pressures supported the Reserve Bank's decision to keep rates on hold at its last meeting. Senior economist Abhishek Gupta joins us now with more from Mumbai. So, Abhishek, why do you expect inflation to start inching down marginally?
Hi, thanks, Paul, for having me. So broadly, three reasons why I expect inflation to inch down to 4.3% in July from 4.4% in June. Number one, oil prices, after falling in June, they've kind of stayed low in July. So they've averaged about $84 per barrel in the month of July as well. And that essentially prevents the second round order effects of oil from passing through to the broader basket. Commercial cooking gas prices were also marginally lower in the month of July. Apart from this, food price inflation slightly softened slightly as well in July. That's thanks to sort of surplus rains last year, which result in a good harvest, a good autumn harvest, and now again a good spring harvest. And finally, core inflation is likely to also inch lower in the month of July, thanks to a sharp drop in gold and silver prices, which are likely to more than offset increases in other components of core inflation.
You mentioned that twin shock of high oil prices, weak monsoon rains as well. Going forward, what are the implications for inflation for the rest of the year? Because right now it is inside the RBI's target band.
Yes. So the supply side shocks have kind of faded if we look at from where we were standing a couple of months ago. Oil prices in the months of March, April, May sort of exceeded $100 per barrel, the monthly average, and in June and July they're down to about $84 per barrel. Even in August, they're so far averaging between $85 and $90 per barrel. So, so the risk from oil price shocks is lower. Remains to be seen where they are headed going forward. It's difficult to kind of predict what's going to happen on that front. On the monsoon sort of rainfall front as well, India saw a massive 35% rainfall deficit in the month of June, and the El Nino has been strengthening. But despite that, the month of July saw surplus rains, and that has also kind of faded the risk from weak rains this year. And that's likely because of a positive Indian Ocean dipole weather event, which kind of offsets the impact of an El Nino on India. Apart from this, if you look at the cereal stocks, the government continues to maintain strong sort of buffer stocks of cereals. Typically, the target is about 40 million tons. Currently, the government is having about 120 million tons of cereal stocks. So all of that should kind of offset some of the risks from weak monsoon rains this year.
So what's this going to mean for the RBI? Because, of course, we did have that dovish hold last week.
Yeah, so I guess the RBI had revised down its inflation forecast for the full year to 5% from 5.1%. And given the fading of these twin supply shocks, even we've revised down our inflation forecast for the full year to 5%. We were a bit more pessimistic earlier on, and we were expecting inflation to rise up to 5.5% for the full year. And that essentially means that RBI is likely to keep this hold unless you see a re-emergence of either of these two supply shocks, which could sort of push inflation or sort of risk inflation exceeding the 6% tolerance limit.
All right, Bloomberg Economics senior India economist Abhishek Gupta there. Well, meanwhile, RBI Governor Sanjay Malhotra has warned that wider AI use carries risks, including biased or opaque decisions, along with data privacy and cybersecurity threats. But he's also urging banks to accelerate their adoption of AI by investing in technology and infrastructure.
The banks that will win in the AI era will not necessarily be the ones that adopt AI faster or the most. They will be the ones who adopt it with full understanding of what they are deploying.
All right, well, joining us now is Tanuj Kapilashrami, Group Chief Operating Officer at Standard Chartered. She's joining us from Bengaluru, where Standard Chartered's India GCC Forum is happening today. Tanuj, thank you so much for taking time out to speak with us. And I just want to pick up on those remarks from the RBI Governor about the need for banks to invest in AI technology as well as train workers. So can you talk to me about what Standard Chartered is doing in India in this regard?
Thank you, Paul, first for inviting me. It was great to hear Governor Malhotra, and I won't surprise you that I agree with everything that he says. It is one of the biggest opportunities across industries, but definitely in banking, a core part of our transformation agenda. How do we adopt AI responsibly across our operations to ensure that we are able to deliver greater customer experience, we are able to manage risk effectively, and we can drive productivity gains in our employees. So, all of that, I agree. I think, I believe that the adoption of AI is not a pure technology challenge. It's all the things that the governor just said. It's leadership, but skills, governance, having the right regulatory frameworks, and the skill building that we are doing to support the adoption of AI in Standard Chartered is massive. I looked at the numbers before this interview. We've had over 50,000 colleagues who have been trained on how to adopt AI in their core work. We have rolled out Copilot to a vast percentage of our workforce, et cetera. And that's skill building and not generic skill building. So the 50,000 colleagues who have been trained on reskilled on AI, it is leveraging 225,000 different types of learning, so to kind of make it really real. So I think to me, the technology is there. It's hugely valuable technology, but it's about the adoption, which is, as I said, it's a leadership challenge, a skills challenge, and getting sort of data and regulation along with you.
Yeah, challenge is the right word, because I don't think anybody's really completely certain how this revolution is going to unfold. But you talk about how Standard Chartered is adopting this quite aggressively. Are you seeing it reflected at all in productivity gains? And if you are, what does this mean for headcount? Do you need more people or less?
It's a really good question, Paul. Yeah, we are definitely seeing improvements in productivity. The way earlier this year, we did our Investor Day, and we spoke about some of the targets to the market, which was around 3 counts. So we said the per FTE productivity going up because we are augmenting human capability with leveraging technology. We said we will see a mix in the headcount mix of our operations. How are we kind of getting the right balance between front office, back office colleagues? And we put out some targets out for 2030, which we are well on track to deliver. And ultimately, we said that the cost income ratio of the bank will improve. So we are on track to deliver all of our targets. I think of this much lesser about an absolute headcount reduction, then I think about the rebalancing of work, right? So what we are finding is that as we are deploying AI across our business processes, there are tasks, so the work is getting deconstructed. There are tasks which are getting fully automated. There are tasks which are getting augmented, which is human plus technology. And there is work and tasks that is going to remain purely human-led. And we are seeing this across the board. We have deployed AI in our WRB, our retail and our CIB operations. We are seeing credit approvals are becoming faster. We are seeing traditional ESG type assessments. The turnaround on all of that is increasing. But we are also seeing that in deploying Copilot with our frontline RMs, their productivity is increasing, which means that they can do much more advisory work with our clients and actually work with our clients to move them up the value chain in terms of advisory work. So to me, it's much less about absolute headcount reduction. We are also saying loads of new jobs are being created, including in GCCs in India, but it's about rebalancing of headcount and change in the kind of work which our colleagues are doing as we deploy AI at scale.
So if you're rebalancing headcount, which markets in which you operate do you see potentially the greatest disruption as that rebalancing occurs? And if you do need to hire more people for the exclusively human side that you mentioned, where do you see that hiring taking place, and how do you compete with other banks who are looking to do the same thing?
Yeah, look, Paul, we run integrated global teams now, so the days of work being done. Look, we are investing in growth in line with our strategy. We are a cross-border affluent bank. We are investing in front office headcount across all of our strategic markets. But when you look at back office operations, we run globally integrated teams. India is a huge part of our capability centers. We employed 22,000 colleagues in India. It's really a center of our technology, data, engineering ecosystem. So, so to me, we are investing in growth across all of our markets, which means headcount is increasing. In our large back office centers, of which India is one and the biggest, what we are seeing is the kind of skills we are bringing in are changing. We are employing far more AI native talent. We are looking at much more cyber data talent in these markets. So it's quite difficult. There are no net gainers and losers from a geography perspective. I think it's the kind of work which is going away and being replaced by other kind of work. But even if I look at India, as I said, our largest GCC, we predict that our headcount in these markets is only going to grow as we are doing more and more sophisticated work out of our shared service centers, including in India.
Well, the RBI governor also raised risks, and we need to talk about those. And this is a nascent technology, of course. Anyone who's used it is very familiar with how careful you need to be. So can you tell us about some of the problems that you might encounter or the ones you're trying to head off? And in terms of regulation, can your industry be trusted to regulate itself, or are you working with governments on regulation?
Well, I am going to say this, Paul, that I think financial services is positioned incredibly uniquely to be able to adopt this technology, because we have been focused on regulation and setting the right guardrails around adoption of AI for a very long time. I always say this, in Standard Chartered, we had a responsible AI forum much before generative AI was a thing. So we've been talking about responsible AI framework standards for a very, very long time. And, I think that's true across industries. I also think there has been incredibly close collaboration with our regulators across the world in our 50+ markets, including in India, where we really value the collaboration we have with RBI. So I think as an industry, financial services is very well positioned because it's been thinking about data sovereignty, data standards, regulation, responsible adoption of AI, ethics, privacy for a very, very long time, working very closely with governments, especially our regulators.
So you're in India for the GCC forum. Can you talk to us a little bit about what you're doing in India and the opportunities in Gulf countries at the moment? Where are you looking to expand?
Look, I'm hugely excited. I came into Bangalore last night. This evening, we are bringing together CEOs of some of the biggest GCCs in India, sector agnostics across sectors, retail, manufacturing, financial services, and bringing them together to talk about this sector and the tremendous change that it has seen in the last few years. So it's kind of moved away from operation shops to far more capability centers doing value-added work globally. So it's a talent pool for the globe, really. And again, I looked at some data this morning. It's predicted that 2027 is going to be another 200,000 employees or colleagues added to GCCs in India. By 2030, we are talking about 2.3, 2.5 million workforce employed in GCCs in India. It's the same story in Standard Chartered. For me, the real purpose of the India GCC Forum is to convene the heads of GCCs and to talk about the tremendous opportunity which already existed, but I think AI has helped accelerate that in terms of India and what it means in terms of talent pool and how do we go about attracting that talent pool. So we're doing that event this evening in Bangalore, which I'm very excited to be part of.
All right. Well, thank you so much for joining us today. That is Tanuj Kapilashrami, Group Chief Operating Officer at Standard Chartered. Well, let's take a look at the market open in India. We've been up and running for just a few seconds now. We've got a rupee that's a little bit stronger against the greenback, 95.41. Signs of intervention there confirmed by some of the traders Bloomberg has spoken to. Pretty flat on the Sensex in the early going. The IT index, meanwhile, losing a little bit of ground. That's notwithstanding some of the encouraging news and results that we've had around tech and the broader Asia Pacific today, but a pretty muted start for Indian stocks at the get-go. Still to come, fresh safety questions for India's aviation industry. This is after sources say the pilot of a jet that plunged suddenly last week has tested positive for illegal drugs. This is Bloomberg. Welcome back. You're watching Insight. Air India is facing fresh scrutiny after sources told Bloomberg that the captain of a flight that suddenly dropped about 300 feet last week has tested positive for illegal drugs. More than 20 people were injured in the incident. Bloomberg's India aviation and infrastructure reporter Mihir Mishra joins us now from New Delhi. So, Mihir, with the pilot testing positive, what's the next course of action for the airline and investigating agencies?
Yeah, so hi, good morning from New Delhi, Paul. The pilot has been tested positive in the second test as well, which means it's confirmed he has failed both dope tests. So the inquiry is now, this will be the key part of the inquiry when the investigators look at this particular incident as to what it means that the pilot was not in his full senses to be able to react according to the situation, if at all it was a turbulence, or was it not a turbulence, or was it something that was it a mechanical failure, was it a turbulence? Amidst all this, the reaction of the pilot in such situations is the most critical bit, which the investigators will look at. For the time being, the pilot is derostered and he is off flying. Both pilot and co-pilot are derostered, and the investigation is now done by the Aircraft Accidents Investigation Bureau in India, and that investigation, so going by the rules, the preliminary report will come within a month of the incident. So the incident happened on the 4th of July. The first preliminary report is expected by the 4th of August, and the report is expected by 4th of September. So within a month, we should expect a preliminary report that should detail about what happened on that particular day, what was the pilot's, was the commander's reaction apt, was the condition that he was in led to late reaction by the pilot that may have caused this 300 feet plunge of the aircraft on that particular day. So all these factors will be looked at, and that is what the status is as of now.
Is it known what the pilot tested positive for, and what happens next in this investigation, and what are the possible outcomes here?
Yeah, so in the pilot report that they submitted upon landing, they have mentioned some sort of a mechanical failure with the Airbus aircraft. So the investigation is being aided by the French Accidents Investigation Regulator and also Airbus. This plane was an Airbus 320, so the aircraft OEM is also part of the investigations. Along with AIB investigators, they will look at all the aspects of the incident. So they look at the fact that what could have caused that mechanical failure. They will look at was there mechanical failure as serious as it has been put out in the report? What could have led to that mechanical failure? That will be one part of the investigation. The other part of investigation would be to look at pilot's response when that particular incident happened, when according to sources, the autopilot was disengaged and the pilots had to gain control. Was the response time in doing that not apt because the pilot was not in his full senses and was high on dope? So all these aspects will be looked at as part of the investigation. Yeah.
Well, Air India's got a new CEO, of course. What are the implications for him? Quite an interesting way to start the job.
Yeah, I mean, it's not a good situation to be in for any new CEO who joins an airline which has its own struggle in terms of record losses during the last fiscal, etc. But while the financial bit is one part of it, operations are key to any airline for not just you to be able to run an efficient operations and utilize your aircraft well, which may lead to more money per aircraft, but also from the passenger point of view. Any such incident does dampen passenger faith in a particular airline. In this case, while financial issues were already there with the airline, such incidents denting passenger faith in an airline like Air India, which is planning to grow not just domestically but also internationally, will also add to the challenges that the new CEO will have to face once he joins and when he joins. I mean, Air India has not yet announced a date of his joining. They have mentioned that they'll announce it in due course. But the situation definitely adds to the existing troubles that the CEO will have to face when he joins.
All right, Bloomberg's India aviation and infrastructure reporter there, Mihir Mishra. Thank you. Just want to get you across an alert on the Bloomberg terminal. This is to do with Godrej Consumer. We are seeing shares losing a bit of ground in India at the moment, off by 8.6%. This is on the news that CFO Sitipati has quit. He's going to be replaced, that is Sudhir Sitipati, going to be replaced by Asif Malbari as Managing Director and CEO of the company. This is going to be effective August 12. Speaking to them in a statement, Sitipati says, "I feel the task that I had set for myself here is done, and this is the right time to move on." He was reappointed for a 5-year term starting in October 2026 when he resigned. All right, let's take a quick look at what we've got coming up at tomorrow's show. We're going to be speaking to the ASUS co-CEO, S.Y. Hsu, going to be talking to us exclusively about the PC and gaming hardware makers' earnings and recent share price volatility. Also, Treasury Wine CEO Sam Fisher is going to join us exclusively to talk earnings and the global industry outlook. But that is it for today's edition of Insight. Horizons Middle East and Africa is up next. Keep it here with us. This is Bloomberg.